Welcome to Divine Traders. Let's analyze today's April 20th trade, where we captured 100 points using a strict one-side view strategy. Here we got stop loss in the first two trades. The reason is simple. Even though we knew CE strength was there, the market wasn't ready to move at that moment. Call riders were strong, put sellers were active, and we clearly saw that CE prices were respecting support beautifully. So our bias was only on the call side. We were not interested in puts. We took the first two entries from support zones, but at that time smart money was not ready to push the price. The market wanted to go a bit lower first, take liquidity, and then move. So even after two failed attempts, our view did not change. Finally, price came to the third support, the strongest and last support zone, where we saw a clean first candle support forming. That was the confirmation. And this time, we entered with smart money, not against it. That third trade is where the real move came, and that's how we captured the clean 100 points. Now, let's break down the full analysis step by step. Now, smart money pushed the price up. After that, price came down for a small retest and held the level. Once the retest was successful, price moved up again. From this move, we captured around 38 points and also recovered our earlier stop losses. This time the difference was simple. Earlier market was not ready, but here we traded when the move actually started. Now, here it looks like the market is showing fear. But the real question is, fear for whom? Is it fear for call riders? When we checked the data, we saw that call riders were not in fear. Instead, they were slowly exiting their positions. That means resistance is getting weaker, and the path for upside is becoming easier. This is a strong sign that the market can continue moving higher. Here, as call riders are exiting and cutting positions, the market is getting lighter on the upside. But since the quantity is not very large, the market will not shoot up instantly. Instead, it will likely give a small retest, stabilize, and build a base around the recent support. You can think of it like the market getting comfortable at that level. After that, once retail traders get trapped or liquidity is taken, the market can push higher with better momentum. Also remember, we entered earlier because Monday often gives a one-side move, and we didn't want to miss the opportunity. At the same time, we did not break our rules. Even after two stop losses, our view stayed clear, and we waited for the right confirmation before taking the strong entry. Everything we did was planned, from identifying support, maintaining bias, to aligning with smart money on the third trade. Now, at this point, it's smart to book some quantity. Secure profits first, and then manage the rest with discipline. Now, this is the most dangerous and stressful phase of the market. This is where everything shoots up: BP, sugar, heart rate, dopamine, CBD, cortisol, adrenaline, noradrenaline, vasopressin, all hormones activated at once. It literally feels like your system is under attack. Kidney pressure, heart attack, vibes, everything starts kicking in. And honestly, in this moment, it feels like you either handle this move or you're getting released straight to heaven. Because in trading, we take the pain, we handle the pressure, because we are men and men are made by pain. At this stage, we had already captured around 89 points. But still, we stayed in the trade and took that extra pressure because we were targeting those final 10 to 12 points based on logic, not emotion. This is what we call the market fear phase. The market is not weak here, it is acting. It is creating fear to force previous buyers to exit. You'll see sudden drops, sharp wicks, fake breakdowns, all designed to scare you out. This is pure SL hunting. Big players know exactly where retail traders keep their stop losses, mostly just below support. So they push price down just enough to hit those stop losses, grab liquidity, and then continue the real move upward. If you don't understand this, you will exit at the worst moment, right before the actual move. But if you connect this with our earlier analysis, everything makes sense. We already identified strong support, we aligned with smart money on the third trade, and we saw call riders exiting. The direction was clear. So this fear was just noise, not a reversal. And in this moment, we took all the pain. We had to feel the pressure, control emotions, and stay disciplined. Now all the SL hunting and fear phase is done. We can clearly recognize this because earlier we marked our support and resistance, and even after all that volatility, price is still respecting our support. That means the structure is intact. If this was a real reversal, the market would have broken strongly near the highs. But instead, what we saw was time passing, repeated fear, and stop-loss hunting, not a true direction change. And remember, real reversals are rare. They don't happen every day. Then comes the final move. Smart money steps in with control, and the market gives a clean expansion, completing our 100 points target. Now this is the best zone to book profits.
Why?
Because most call-side resistances are already achieved. There's no strong, fresh resistance left to push the move easily higher. At this point, the logic shifts, call selling starts making sense, but put buying becomes risky. There's no clear support below, so buying puts here is close to guessing. So instead of chasing, smart traders book profits and stay disciplined. Stick to your rules and stay calm, even when you face losses in a profitable strategy. If you like this analysis, make sure to like and subscribe. We go live regularly on YouTube. You can join our live sessions too.